Good morning, or good afternoon, I guess it is for most of you. Let me know how you doing, Will. Good to see you guys. See a lot of familiar names. That's good. Let me get this thing going here. Oh, that's on my wall. It's like it looks like water on my screen. Hey, Kevin, how we doing? Welcome out to Trading Coaches Playbook. It's good to see you all. How's the market treating you? It's a little crazy, right? It's been insane it's been insane for pretty much this whole year, but it's always kind of insane. The question is, what level of insanity are we at, right? Let me get the disclaimer out of the way. We are not registered broker dealers, investment advisors. I will not give you any recommendations or advice. Everything that we do here is purely for educational purposes. If I do happen to mention a trade, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So wacky is a good way to describe it. Yes. So, but it's also very, very good if you can see the patterns. I'm a little cranky. I missed Apple this morning. I had to take my kids every other Friday. I take my kids to school in the morning. And this morning was one of those. And so I have to leave basically right at just a few minutes before the market opens. And today I was looking at Apple. It's up 8 days, not just up 8 days, but it's up pretty solid 8 days in a row. And if you're all familiar with the candlestick theory that 8 days, if it's up 8 days in a row, then the odds are almost 100% that the next day is going to be down. So I was looking at it yesterday going, I almost pulled the trigger on some puts right at the close because it rallied into the close. You know what? This morning, if it hits 175, I think that's a good spot. Well, it went up and hit 175. It hit 175.28. Within 10 or 15 minutes, it dropped back below. And yeah, it's below 173 right now in less than an hour or so. So a little flush that I missed that because I missed by about 15 or 20 minutes. So if I would have been home 15 or 20 minutes ago, but woulda, shoulda, coulda, right? So, but it's okay. I didn't pick up some puts on it anyway. We'll go look at it. So here's all the upcoming events. You got Brandon's SPX, the S&P Cash Flow Secrets Q&A that was last night. I thought I saw the email coming through saying that it was there. So Monster Market Movers tonight. Mastering the Trade is April 6th. Trading You is it that close to April? It is, isn't it? Oh my goodness. It's only a week away. And then Patterns of Flash is April 14th. That is with yours truly. So I would agree, Will. I would love to do that. I've been trying for the past 2 years. I set up an account in their names, put some money in it, and been trying to get them interested in. They just don't. They're not. And I do actually. I usually have my phone with the app running, showing what stuff's doing, so I can see the prices. At least I can look at the chart if I want. And a lot of times in the morning, they actually get. They're like, "Shut up! Stop talking about trading." A lot of times in the morning, like, "Oh, this one's doing well." I'm talking about it in the car with them. So they see it, they're exposed to it. They get kind of annoyed. They haven't gotten to that point yet where they have a strong enough desire to actually learn it. So they have a kind of a cushy life, unfortunately. Not unfortunately, it's good and bad. So I don't spoil them too bad. So I try not to, but I make them work. Not as hard as I had to when I was a kid, but one day they'll figure it out. My son's got a car. He has not gotten his permit yet. He's 15, right? He turned 15 in August. I keep asking him, like, when are you going to get your permit? I'm not going to do it for you. His mom's not doing it for him. So it's like, you got to find the motivation. It's like, how are you going to pay for gas, especially now? Because he's got a 4Runner. His grandparents bought him an older 4Runner, so 1990 something. So it's not exactly a fuel efficient car. And so how are you gonna pay for your fuel, especially now? It's going to cost you $50. Where are you going to make that money? I mean, you go to McDonald's and make $15 an hour, but it'll cost you $10 for a burger too. Anyway, so the free online workshops. So yeah, I'm trying to get my kids going there, but So the free online workshop's coming up. Power Hour is Monday, noon to 1. Trading Coaches Playbook, what we're doing now every Friday, right? Market Mornings with Rob is every morning at 8:30 Eastern time. Portfolio Protection on Autopilot is this. Some of this is old. I should have taken this off there, so my apologies. I just realized that's a week ago. 30 Days Trading Success is coming up. That is a date in the future, the 30th. I believe that is Monday or Tuesday, correct? Power Option Plays Tuesdays and Saturdays, and then Cover Call Explorer on Thursday, and E-Mini Think Take with Brandon Monday, Wednesday, and Thursday. So in the mastermind group, I don't know if I mentioned that. So I'd love to learn to fly planes, Will. I wish I'd learned to fly planes at that age, but of course, all the social places, you can find us on all of those. Brandon's, there is his 0-day expiration. And that is, I see those texts coming through, and I have yet to really look at them. I mean, I look at them and I see them, but I haven't pulled the trigger on one yet. So I keep looking to see if it's something I want to do, but you get busy doing your own thing, and then it's hard to shift gears. I used to do that a lot, especially when I started. You try and everything, trying to figure out what you like, and then eventually you get into groove, and it's like, do I really want to muddy the water and put more stuff in it and mix it up? And that's where it gets hard. It's not much different than, when you get older, right? You get kind of set in your ways and you don't want to change anymore. So, and I'm getting older. I'm getting set in my ways, and I don't want to change anymore, right? You get something that works for you and stick with it, right? If it ain't broke, don't fix it. And then Rob's 30 Days of Trading Success is coming up. He's doing a free training, 2 sessions on the 30th, one at noon Eastern time, one at 8 o'clock Eastern time. So, and the keyword there is free, right? That's always good. So here's what we're going to talk about today. Make sure I'm not missing anything crazy. If y'all have any questions, feel free to throw them in there, and we'll go through this. We'll just ramble on a little bit, talk about probability, and then we'll go look at charts. We'll spend probably half the time here looking at charts and analyzing things. So if you got particular stocks that you want to look at in a little bit, then have at it. But probability is, I think it's one of the most important concepts to understand. One of the things that you will want to do if you're not there yet is train your mind to think in terms of odds. Like Apple, that's the only reason I'm looking at Apple. The odds are, after 8 days of being up, the odds are, I don't remember what the stats are. I read about it years ago. I just remember the concept of 8 days in a row. It's a candlestick concept, right? 8 days in a row up, the odds are, I think it was like 93% or something like that. It went down the next day. You never know how much or how far it's going to drop, but the odds are that it's going to go down because, 8 days is a lot, right? There's something in I don't know if it's Japanese culture. It seems like the number 8 has some, maybe some of y'all know that. I know I've heard this before. They have lucky numbers and certain things, and 8, yeah, 8's a fib. I know that. But there's something in Asian culture that 8 has to do with. I can't remember if it's bad luck or if it's good luck. It's something I heard about years ago. Is that what it means? Okay. Yeah, see, you guys probably know more. I just remember reading about it, remember the concept, and I kept that with me. But trading is all about odds, right? It's not about being right or wrong. It's not about picking the right direction. Obviously you have to do that, but it really ultimately, even though you've got to make a decision about which direction you think it's going, but it's very important to get the odds on your side from a long-term perspective, right? I'm not talking about just every little trade, even though that's important, but from a big picture perspective, you got to put the odds on your side. Okay, it's good luck. That's right, Trip. Thank you. It's good luck. So number 8 is the lucky number. That's right. Oh, is it a Chinese thing? Balance of yin yang is 8. Oh, that makes sense, I guess. See, this is what I love. I learn new stuff too, because it is important. But I just knew the concept, and so it's a good luck number. Well, hopefully they'll bring me luck and Apple will tank, which is not doing right this minute, but that's all right. Till Trip, you said hi? Okay. Did you hear that, Trip? That's from Will. I don't know if this is a pun or maybe this is a little off balance right now, but with the war that's going on in Ukraine. But if you haven't figured this out yet, trading is not, it's not a war between you and the market. Sometimes it feels that way, right? It feels like the market's just beating you to death half the time, right? It's like, why is it going that way? It shouldn't be going down. It shouldn't be doing that. But it is. It really is a war between you and yourself. It's really a battle of mindset. And when you learn to think in terms of odds, that certainly gives you a significant shift with regard to mindset. If you come to the market, and a lot of people, and one thing I'm going to show you here is one thing, if you haven't seen this, is a lot of people come with the attitude and the mindset. And I did the same thing when I started. I've got to be right more than 50% of the time. Otherwise, I'm not going to make money. And that just, nothing could be further from the truth. You know how many people out there have, and there's several, I've met several trading coaches throughout the years that literally had, they were a one-hit wonder, right? It's not much. I mean, you could equate it to music, right? You have the one-hit wonders, right? They have one big massive song. I mean, Vanilla Ice, Ice Baby, right? I mean, that was a monster hit at the time, but then he went away. But he still made a boatload of cash off that one song, didn't he? Trading's not any different. You can have one trade, have a monster trade and make millions of dollars, and then have nothing else be successful. So, and the reality is that the important part is having big winners, multiple, not necessarily multiple, but bigger winners than losers. If you have small losers and a bunch of winners, right? If you got one, I said that backwards. You got a bunch of little losers and one or two big winners, right? If you lose $1, you lose $5 on 5 different trades. And then you have one trade where you make $8. You're still ahead, right? Who cares? So being right doesn't matter. Being accurate and right more than 50% of the time, that doesn't matter either. And I'll show you. The real question is, do you want to win the war or the battle? Do you want to win on every single trade? Or do you want to win in the big picture? I've got a couple trades right now I'm getting smoked on. But overall, I'm still up because the other ones that are going well are making up for that, right? So I'm not as concerned about it. I don't like it. It's not necessarily fun, right? It's not fun to have one or two trades that go against you really bad, that gap, and it's like, what do you do now? But it's so far away, might as well wait for a little bit and see if it pulls back. And if it does, then I'm just mitigating losses at this point, trying to lose less. But in the big picture, it doesn't matter, right? It's all about risk reward. And I'm sure you've all been to a store, a retail store. Some of you maybe are in a retail business. What do? Right? They buy a bunch of products at a wholesale. You buy a t-shirt for $5. You mark it up to $40. You want to sell it at $40. But what happens if it's not moving? You got a whole rack full of t-shirts. You bought them for $5. You're going to try to sell them for $40. And you've got 100 there and you only sold 10. Well, you maximize your profit on 10. Now what do though? You got to put it at a discount, right? You drop the price. You say, hey, 25% off. They're only $30. You're still making a profit, but not as much as you would have if you would have maximized it, right? And got it full price. And then you eventually discount it down to a point where they finally all go, right? It's a supply demand thing. If there's not enough demand for it at that price, you lower the price. Trading is really no different. You buy inventory at what you hope to be wholesale. You buy it at a price that you think you can sell it for a higher price. And if it doesn't go the way you thought, if you buy 100 t-shirts and they sit there and nobody buys one of them, you're losing everything, right? If you have that same mindset where you're buying an option with the intention of selling it at a higher price and things don't work and it goes against you, then you get out and you sell it for a loss. And then you move on and go find a new product to put on the shelves that hopefully will move off, right? That's the ultimate goal. I haven't had enough coffee yet today. Here's where it gets interesting. And this is one of the reasons that odds is so critical. Is trading a zero-sum game is the big question. And the answer is absolutely not. If you're trading options, which I assume that most, if not all of you probably are, if a stock goes up $1, do you make the same amount as if it goes down $1? No. because you've got a delta of 70, right? Let's say you buy an option with a delta of 70. If it goes against you by $1, you've lost $1, but you've also got the slippage, right? So not only did you lose 70 cents on the delta dropping, right? It moves $1, you lose a spread of 10 cents, and then you got a commission to call it a nickel, which maybe is a little high. But the stock moves $1 against you, or excuse me, it moves in your favor. If it moves in your favor, you're making 55 cents. If it moves against you, you're losing $1. It's not even close to a zero-sum game. If it moves against you, you're getting hammered pretty heavy. If it moves in your favor, you're making some, but not as much. That's another reason that odds is extremely critical, because the deck is stacked against you, right? It's not much different than playing roulette. I can't use the blackjack example because blackjack you can beat. Blackjack's super easy, actually. That's why I got bored with it at 17 years old. And I switched to poker at 18. And then I realized how much more fun it was. If you're poker players, you understand. Because that's one thing too with poker is that, right, the house, you're not playing against the house, but they take a rake, right? They take their little cut of each pot. So even though you're playing against the other players, you're not playing against the house, they're taking a piece of what you should win. That would be the commission, right? Same thing. Make sure there's no bomb threats at my kid's school again. Was that last time we were doing this? I don't know if it was Trading Coaches Playbook or another one. But I got a text from my son's school saying that they were in lockdown because there were threats of a shooter or something like that. Some kids outside were playing with some toy guns in the parking lot. And the security officer saw it on camera or something and thought it was a real gun. So it was a big deal. They were in lockdown for a couple of hours. And it happened right about this time. It was like we were 15 minutes into class. So I kind of already said that. You got to learn to think in terms of probability, right? You got to put your mindset in odds perspective. What are the odds of X, Y, and Z happening? And somebody was that last week? Who was that asking me about? Because I had a stock that it had gone that day we were doing it. I think it was last week in Patterns in a Flash class because the market was open. Yeah, we were in the last hour of the market, and it was beyond my stop by just a little bit. And I'm looking at it. And he says, well, you're outside of your stop. You're supposed to stop out. I go, I know. But sometimes you take other factors into account. You go, okay, I'm already upside down $500. If I lose, I'm willing to take the risk. I look at it risk reward. Go, is it worth hanging on a little bit longer to see if it reverses? Am I willing to take another $200 or $300 worth of risk for the possibility of it possibly coming in my direction? Because I'm all about sticking to the rules. You have a plan, stick to the plan. But there are some times when it makes sense to deviate from the plan, right? Speaking of war, it's like that, right? You go in with the plan, but sometimes you got to deviate from it. And it's not necessarily a bad thing. The question comes down to, okay, here's where you're at. What's the risk reward? And I literally look at it, okay, I'm upside down $500. I might lose $200 or $300 more if it continues to run the next day. I'm willing to take that risk. I'm willing to risk a couple $100 more. So yeah, I'm breaking my rules, but I'm okay with it because I'm comfortable if I give another couple $100. So if you're not familiar with risk reward, no way. Is that the real Linda Wolf? I see that name. I know it. I don't know if that's the same spelling. I knew a trader 20 some years ago. Her name was Linda Wolf. I just saw that. I just happened to see the name there. I went, I wonder if that's her. If it is, hi. Long time. But if you're not familiar with risk reward, I'm going to just briefly do this. So if you put $10 into a trade, okay, good to know. If you're going to stop out at 9, you have $1 of risk, right? Sometimes, and this is easy to get, as far as I'm concerned, it's a little off track, but you're not really technically risking. You are technically risking the whole $10, but the odds of it going to zero overnight are pretty slim, right? Stocks just don't move that big for the most part. It can happen. It's possible. So is your whole risk $10? Yes, but in reality, it's wherever you're going to stop out of it, right? So your potential reward, if you invest the same $10, you got a target of 13, you got a potential reward of 3. We call this a 3-to-1 risk reward ratio, right? Where you have 3 times as much upside as you have risk. And that's exactly what we're looking for. And here's why. I know many of you have seen this already. If you haven't, this is where it would be good to watch. And it will probably, I don't know if I shouldn't say it'll scare you, but it'll boggle your mind. Maybe not. I know when I saw it, it did. So what we're going to do is a series of trades here, right? 7 to be exact. You're either going to make $3 or you're going to lose $1. That's good to hear, Will. Will says, yeah, it's an eye opener. It makes you feel better about small losses. And now you're stealing my thunder, but that's okay. So we're either making $3 or losing $1, and we're going to keep track of the percentage, the profit and loss, and the percentage of winners, your batting average, if you will. All right. So the first trade you do, trade number 1 comes out negative. You lose $1. You give $1 to the market, didn't work out. You're negative 100%. Trade 2, same result. You're now down $2 and you're negative 100%. You have a 0 batting average. But trade number 3 works out in your favor. Instead of losing $1, you make $3 because it hit the target. Now your net profit is up $1. And how's your batting average? You're 1 for 3, right? 33%. You're only 1 for 3, yet you're profitable. Well, until trade 4. Now you lost another $1. Now you're back to even. Trade 5 and 6, they both go against you. You take 3 in a row. But trade number 7 goes in your favor. And where are you at now? You're up $1. You are profitable. Yet how many trades have worked out for you? Only 2 out of 7. That's 28.5%. Your batting average is 285. You've been right less than 30% of the time. Okay, you're still up. You're still profitable. Some of you are scratching your head going, that doesn't make any sense. It's simple math. If you make $3 on 2, you're up $6. You lose $1 on 5, you're down 5. You lost $5, you made 6 on 2 trades. That's 28%. You don't have to be right more than half the time. You can be right 25. Well, yeah, 25 essentially. If you're using 3 to 1, 25 is where you break even, right? So anything above 25%, probably 26, 27, 28%, you'll come out ahead. You got the slippage and the commissions and stuff to account for, right? So you got some expenses there. If you can be right 1 out of 3, you're going to kill it. And honestly, it makes a lot of people, they just go, what? Simple math. Now, the big key to this, the big thing that's important is the benefit to realizing this and recognizing it. And Will alluded to one. Makes you feel better about taking small losses. Yes, I believe so, Michael. Like I say, I'm sorry. I don't even know who my, yeah, oh, Clarice, I thought so. Correct me if I'm wrong, Clarice. This is on YouTube later. It stays up there, right? It gets posted on YouTube at some point in the future. I'm almost certain it does, Michael. So, yeah, okay, that's what I thought. I just wanted to be certain. The beauty of this is when you realize that you don't have to be right that often, it makes it much, much easier to say, you know what, I'm going to stop out of that one for $1 loss. Because I would venture to say that there's probably 1 or 2 of you that have probably gotten into a trade and you didn't follow the rules and you didn't stop out and you didn't, even though you broke the rules, you continued to hang on too long. I bailed on mine. The next day it went up. I got out of it. I took exactly what I expected, $200 or $300 extra loss, which I was okay with. But you hang on, and then it gets worse. And what should have been a $1 loss now turns into a $4 loss. Now, that right there gets totally out of whack if you do that. Take one of those and make it a $4 loss. Now you're upside down $3, even though your percentage is the same. You know what I mean? So if you take one of these $1 losers and add $3 to it, you're underwater, even though your percentage is the same. So if you just stick to the plan, and you stop out when you expect to, then you don't have to be right that often. And like Will said, it makes you feel better. And that's where it comes in, is emotional control. And managing your mindset and controlling your emotions is what is critical here. And learning to think in terms of odds and putting trading into an odds perspective and looking at it saying, you know what, I don't have to be right that often. I don't care if this one goes against me. You know why? Because if I take a little loss on that and the next one goes in my favor, boom, I'm good. That's the beauty of this. That's why probability is so critically important, not just from a numbers mathematical perspective. That's the superficial static thing, right? That doesn't change. Numbers are numbers. But when it comes to managing your emotions, this is absolutely critical, because now I don't care if I'm right. It doesn't matter to me. If I'm wrong, great. If it moves against me, like Apple, I mean, it's basically even right now. I mean, if Apple bumps up and it goes above 175, I'll get out and I'll take a small hit. I don't care. It'll cost me probably 50 cents a contract. No big deal. I look at it and go, okay, I took a little loss on it. I took a shot at it, but I don't have to be right on Apple. Doesn't matter to me. So a lot of this really works with your mindset. And that's the important part to it. And that's really the key to it, is as far as I'm concerned. So let me ask Clarice, do we have a link? I don't know if it produces a link until it's finished or it's uploaded. Honestly, I'm not even certain. Is there a pre-made link that we can drop in here to get to the YouTube video? I'm going to say probably not, but I'm not that familiar with how YouTube works. I utilize a lot. I watch a lot of stuff on YouTube because it's a great way to learn certain things. I've learned a lot of stuff about cooking in the last few years, at least making good meat, because I love a good steak. So, oh, perfect. See, that's why I love the support staff we have. Clarice is going to send you a message, Michael. I'm not sure when, but I'm assuming after, but she'll take care of you. She'll get you taken care of. That's all that I know. That's all that matters, right? You're welcome. Well, Clarice says you're welcome. I guess. I hope she does. All right. We got about 30 minutes left. We are going to spend the rest of the time looking at charts. Any questions or anything at all about the whole probability thing? Any of you scratching your head, wondering if it's just coffee that I'm drinking? It is. It's kind of mind-boggling. And I'm really curious if there's anybody here that hasn't seen that. I've asked this before, and it's always interesting to hear people's answer. If you haven't seen that example before, what are your initial kind of thoughts? What are you like? What's your reaction to it? I guess that's always what I'm curious about, is what people react when they first see it. Because I've literally had people tell me, I mean, in face-to-face, we've been at workshops and I sit down and pencil it out. And they're just like, that. There's no way that can be real. That can't be right. It's just numbers. It's just math. I mean, that's awesome. I don't know who Bob is, but hopefully he's not a real person. And if he is, hopefully he can handle it. He says to get my steam off, when I lose, I punch Bob. But here's the beautiful thing. And and maybe this might hit some of you weird too. And I know I've said this, is that I think the best place you can get to mentally and emotionally from a trading perspective is when you can celebrate stopping out of a trade and taking a loss. I know some of you are like, huh? When you get to a place, when you have shifted your mindset so far that you look at things from an odds perspective and you say, you know what, good, I got stopped out of that, I'm happy, fine. Now I can go find another trade that might work out in my favor. I took a dollar loss on that. Now let me go find a trade, get into something else that could make me $3, because this one doesn't look like it's going to. So I'm out. You get your cash back and you go deploy it somewhere else. When you get to a place where you can be happy, or at least not be upset and need to punch Bob, right? Losing in the market is no big deal. Once you get to that place from a mindset perspective and you recognize that I don't care if I lose money or not, because I'm going to make it up on the next trade. That's when you've arrived, as far as I'm concerned. And it's not easy to get there. It's definitely a challenge. It is definitely a challenge. Okay, good to know. I think I knew that. It's also, so it's on, for those of you who can't see this, I know Carly's put a note into Michael that Watch the replay on Wealth Builders HQ. You just go to the Wealth Builders WBHQ TV. The replay is posted up there. That's good to know. I think I knew that. I just had forgotten. I'm going to do a quick update here. See, there's Apple. You see that 1, 2, 3, 4, 5, 6, 8 days in a row. Not only up a little bit, but up a lot. I mean, 8 days in a row, this thing just took off, which made me cranky because when it broke down below here, I had gotten short. And so I got stopped out of Apple and took a little hit. So, oh, there we go. There's the link. I don't know if that's just to Michael or everybody, but. So if y'all have any tickers you want to look at, I will go through. We'll look at all these. There's Apple. That's why I'm cranky. I looked at 175. Notice we have an evening star here, back here at the 175 level. And after that, it just tanked. So I don't know if it's going to do that or not. Okay, thanks, Clarice. Yeah, the recording will be uploaded sometime next week. So there's Apple. It's already moving back down. That's good. We'll just look through some of these. AEM. This is a gold stock, and you've probably seen a lot of gold stuff's just gone kind of crazy. I'm still cranky with NEM, but it is what it is. I'm kind of cranky too because it went to 72, and I looked at it and thought, yeah, but I figured there was a little more downside, and I should have picked up a little position in. So, but I didn't. It's okay. It's easy to get cranky when you miss trades, but it happens all the time. Like you just got to get used to it. I still don't. It's still frustrating, but how come that? I was trying to get rid of that. That's all right. I'm not gonna worry about it. So here we've got AEP. This is, and there's a lot of these. This is electric. Utility energy stocks are still kind of on a tear. A lot of them have created flag patterns or pennant patterns. That's exactly what we have here. So looking for some potential on the upside there. Where's Amazon at today? This one, even though I don't trade Amazon, I mean, the chart can be beautiful, but I just like Tesla. I mean, the option is just so crazy expensive. It's like, what's the point? I'd rather go trade Alcoa. Alcoa moves. Where's it at today? It's down $3.50. It's a $90 stock. So that's what, 3%, I think? That's a 3% move. For Amazon to move 3%, it's got to move 100 points, which it does without any issue. But why would I pay 100 or 200 bucks for an option contract and get a 3% move in the stock when I can go pay? I can't remember. The last time I traded Alcoa, they were $6 or $8. I can go pay $6 or $8 and get the same 3% move. Why not go buy 20 contracts on Apple at $5 a piece? That's 10 grand versus $100 option contract on Amazon. Now I have, how many did I buy again? 20, whatever it was. I've got that much more leverage. I'm getting the same percentage move, but if I'm putting a dollar amount into it, I put the same dollar amount into Alcoa, except I have 10 times as much leverage. And the percentage move is what we're looking for. If you look at just static dollars, you're missing out on lots of really good trades because the little stocks can be really volatile. D-Dog's another one. It's a $150 stock. And that thing moves, that's down $7 right now. It was up $3 this morning. It'll move 10 points in a half hour. I picked off the other day on just a day trade. I think I pulled 8 points out of it, 7 or 8 points out of it in 45 minutes. It was awesome. I'd rather trade that than Amazon. I mean, nothing wrong with Amazon. The chart's beautiful. You got this huge resistance there at 3,300. Kind of coming in the 3,250 there. It's, you know, we've got the midpoint of a double bottom. It's technically a double bottom, but it's stalling out too. So I just don't see any sense in trading the massive dollar amounts that it takes to trade these when I can trade something that's smaller that gives me the same amount of percentage movement, but I can get higher leverage because I can buy more contracts. Make sense? So I don't really look very often. I know I have Tesla on here too, because I love this because it's right at 1,000 and it's stalling out. And this looks a lot like Apple. And I would love to go buy some puts on this. But I just got puts on Apple for 470. I don't even know what they are on Tesla. They're probably 100. I looked at some back in here when it was up here well over 1,000. I looked at the 700s. I was looking at leaps, so they were a year out, which means they're going to be more leveraged, right? I mean, they're going to be a lot more expensive. But they were like $200. And the stock was, I think, if I remember right, it was around 1,100. It was somewhere in here where it started to peak out. And I remember seeing it come back up in here. They were $200 for 400 points out of the money. It was insanity. I'm like, yeah, I'm not going to trade Tesla. So even though I love the stock and it has give some, I think that it's probably going to drop from 1,000 here. And I would say it'll probably come back to this 750 range. But who knows? You know, oil prices are definitely having an effect. But even Elon knows that high oil prices are not good for him either. Because when people are spending more money on basic necessities, you have inflation, they can't afford a $100,000 Tesla. He needs people to be able to afford his cars. So, and if, you know, we go into a recession and people start getting laid off and things get worse, they're not going to be buying Teslas. APO. Yeah, exactly. Those portfolios get hard. Just hang up on them. I'm just kidding. Well, APO, this is what I've been watching. A nice little descending triangle. It actually broke a few weeks ago. And still looking at it. It did break above that little resistance level, but it's back below it now. So just keep an eye on. These are ones I'm all watching, right? BK. There are some that are looking bullish right now. This one it got beat up so bad. This is a bank, of course. And banks have it's really kind of weird. There's a lot of, it's so normal that when markets are bullish, like they have been other than this year, 2020 after the COVID crash, and 2021, things were in bull mode, and just about everything was going the same direction. And then middle of last year, a lot of the smaller tech names started to go the other direction. They started to go down, even though the overall market was going up. And right now, most of this year, other than January and February, were for the most part down. Now we've got this kind of weird dichotomy where there's this, you know, some stocks are up a bunch and others are down. Some are getting hammered, some are going. It's not everything moving in one direction. It's really individualistic, if you will. When normally it's the overall market drags 70 or 80% of stocks with it. Now we've got this weird situation where they're well, for example, I don't know where it's at now. It's only up a dollar. IBM's going up even though the market was going down. Hewlett Packard was going up even though the market was going down. And then when the market's going down, sometimes those two are going up, and they're going kind of opposite the market, which is weird, especially considering, well, IBM's not just tech anymore, but Hewlett Packard is for the most part. And to see them go in the opposite of other stocks, then Apple's been raging while a lot of the other tech stocks have been dropping off. So yeah, it just seems a lot more divisive, if you will. Not to open any kind of political can of worms, but it's like everybody's going in a different direction, right? Nobody knows what's up, and it's just chaos, right? So BK, I think if the market continues to rally, which I don't expect, I think at best it's going to go sideways. It's just run a lot in the last week and a half. So I would expect it to roll over. In fact, the Dow is still challenging that downtrend line that it's in. And if it does drop from here, then we have a confirmation of it for sure. Well, let me bring it up here so you can see. I know I keep looking behind me because you can see that's my trading machine behind me. So if you don't know me, I don't do anything but trade on it. The one I'm on here is this is the one I use for everything else. So there is the Dow, and there's going off the close. It's slightly above it, but not much. So we're testing this downtrend line right now that we started, right? It's only got one hit, essentially. There's this, and this is the close on it. So we can draw the line, but unless we hold it here, but you got 4 big days that are up. And you see what happened here, right? We got 4 big days up. It danced around for a week and a half, and then boom, it fell. Is it going to do that again? Don't know. Are the odds there? Considering we're talking about probability, I think so. I think the odds are that's what we're going to see is another just kind of a stall out and then another drop off. I think what could stop that, could cause another rally, would be some kind of positive news, some kind of good news, good economic news, which there's not much of right now. Inflation is still pretty crazy. I think the next thing, earnings have been kind of mixed. Some companies are doing well, some not so much, but a lot of them are giving guidance for a rather bleak future because of the inflation. I think if we see any major companies start to announce layoffs, I think the market will freak out. But who knows? I think if there's no news, if there's no positive news that comes out, I think we're going to turn back down. If negative news comes out, I think we'll turn down fast. And I think positive news will create a pop, but it will be short-lived. That's what I think. Downside, good question. Downside move of the head and shoulders, which, yeah, if you're not familiar, and if we haven't met, patterns and flash is my thing, right? I'm a patterns guy. Somebody dubbed me the pattern whisperer, which was kind of cool, humbling, flattering, all the above. Yeah, I look for patterns, and there's one there that if you're not familiar with the head and shoulders, then you definitely need patterns and flash. There's no doubt about that. But you've got a head here, left shoulder, right shoulder. And then we get the measured move, which we go from the neckline up to the head. So that's about 27 points. We'll just double click that, duplicate it, and bring it down. Put it right about there. 31.5 looks like, and watch. Yep, there's definitely some support there. There's a long-term trend though. I'm glad you asked that, because there's the bigger picture. There's monthly. Okay. So there's a monthly chart on the Dow. And actually I'm curious where that comes in. If you go all the way back to 1980, and this is where it can get tricky as far as drawing lines, because in fact, it maybe would be wise to go to a semi-log. Let me get rid of that. And you know what? Actually, we're just going to keep this one here. No. That was the bottom of 08. Oh, my goodness. I don't know if it's my mouse or it's just me, but. So I changed to a logarithmic scale where it does it proportionally. You can see the right here now, the big gap between 2,500 and 5,000. These are all 2,500 increments, but they get smaller and smaller. So it scales it on a percentage basis instead of a static basis, right? And usually on a longer term picture, that's essentially what you want to do. It gives it's more relativity, right? And that's essentially kind of what we're looking for on the long-term picture. Now let's go back and see what that, yeah, see, that's what I don't like about it. It kind of whacks it out. But in reality, on a long-term picture, that is the number right there. So the low, I mean, that's the trend line coming in there about, it looks like, if it takes a year to get there, it'd be 21,000, a little more than 21,000, which is 13,000. 13,000 points on 3015 is, what is that percentage wise? A lot. A lot, right? I mean, I'm not rooting for that. Don't get me wrong. I know some people are like, you're always so negative. It's like, I'm not necessarily rooting for that, but if it's going to happen, then I want to take advantage of it, right? I don't want to see the economy tank. I want to see people thrive. But if it's going to happen, then I want to thrive and feed my family still, right? And that's the beauty of trading. And that's why we all trade, right? So you can still, even if you get laid off, even if something happens, as long as the market stays open, you can make a living as long as you learn to do it right. Then that's where patterns come in handy. Because, and let me show you. So there is, trying to remember if it did on the, I know the S&P was very clear. Yep. If you're not familiar with the head and shoulders, there's one right there. left shoulder, head, right shoulder. This was middle of 2007. Now, the concept of the pattern is, if you've been through patterns of flash, you already know this. If not, then you got a bull market going, right? And you get the head, we made a higher high, but the right shoulder is an indication that the bulls did not have enough strength to get it and break it above the previous highs. So they created a lower high, which is the start of, it indicates the trend is getting weak, right? So there's the expectation for that one. And of course, it dropped off there after a couple of months. It rallied back up, but then it turned over and then everything hit the fan. You all remember that, I'm sure. So historically, you can see, and the S&P did the exact same thing. The S&P is doing the exact same thing now. It's created a head and shoulders, and it broke the neckline. And now this picture looks very similar, does it not? So I wouldn't be surprised if we have a similar type of pattern. This thing drops off to about 31.5, comes down, hits the target just like it did there. It gets close, maybe 32, rallies back up to 33, maybe 34 again, and then if we turn back over. So I mean, we never know, right? But in my opinion, there's a lot of, when you look at the economic data, a lot of the big picture stuff, there's a perfect storm that's been brewing for a while, that when it hits, when it makes landfall, it's going to be ugly. I think Cat 5 is, there's so many dominoes that have yet to fall yet. And again, I'm not trying to be negative Nancy, but the reality is that if this thing's going to tank, I want to capitalize on it. Like food, storing up food. Yeah, I tell you, it was crazy. I was at the store the other day and I didn't even know it was just a basic store, and they had food storage buckets and the the auction absorbers and all that stuff. They had a whole section over by their bulk section of like food storage items, and that's gotten real big the last couple of years, especially the last year. And yeah, I mean, their politicians are out again. They're saying that there may be food shortages. That's one reason that a lot of people are freaking out. And if you could see that corner of my office, you'd see a bunch of things. I've got a ton of food storage as well. So I've got a bunch, a ton. And I've been stocking up on stuff a lot. So it's again, not trying to be in panic mode, but at the same time, if God forbid something bad happens, I'm going to be prepared at least as much as I can. So it's just, it's getting crazy. It's getting absolutely crazy. To do what? Oh. I don't think I'm hoarding it. You call me a hoarder? You can't even see that corner of my office. I'm not hoarding. I just have enough food to keep me going for a while if need be. If the stores run out of food or something like that, I mean, I'm not going to let my kids starve. That's more what it's about. If I starve, not that big of a deal, but I mean, I got to keep my kids alive at least. Exactly, Barry. And honestly, you know what? My kids are even like that. And I probably went overboard. I got probably more than I needed, but I'd rather have too much than too little. It's kind of like money, right? It's better to have too much money than too little, right? And overabundance is never a bad thing for just about, especially basic necessities. But yeah, no, I probably went overboard. But then again, it's like I tell my kids, it's not just about me. I mean, God forbid there is something like that happens, then your other family, your neighbors. I mean, my dad's, he's probably had, as far as the economy goes, he's probably taken advantage of the best we've had in this country, at least. But he has the attitude, it's like, well, that's what stores are for. Like, well, yeah, go to Costco when the thing started trying to get water and TP. I mean, if there's something happens, people are going to run to the stores and grab everything they possibly can and empty the shelves. And then you have supply issues. I mean, again, I know it sounds a little bit crazy and far-fetched, but it's happened before. And frankly, it's happening right now. right? In another country. It's not our country. And I don't think that it would happen here, but crazy. Yeah, well said, Trip. Better to have and not need than to need and not have. So we are traders. That's the beauty of trading, right? That's a good point, Barry. Barry said that there's shortages in Miami every time there's a hurricane warning. So if people know there's a natural disaster, what do? They run and stock up. Well, this time we don't have a natural disaster. We have a man-made disaster. But that's a good point. I hadn't really thought about it like that. So, but yeah, I'm well prepared. Yeah, distilled water's been gone. I'm okay. I got a distiller. I literally bought just a little basic distiller just to distill water if we need to. And now I'm sounding conspiracy theory crazy, right? Again, it's just a matter of being prepared. That's all. And when it's, it's $50. It was a little one. I found it on OfferUp. It was brand new. The guy had never used it. Just a little basic thing. Again, it's just for emergencies. For $50, it's well worth it. So they're not super expensive. Now you're going back to what you were talking about earlier. Okay. You use that word there. I'm not going to use it again. So Citigroup is this is another one looking at a potential downside. This was when we had a big down move. You see the volume. This is one thing I love too, is when you see a big move like this with lots of volume, there's a lot of people bailing on the stock on Citigroup. Not sure why. I'm not sure if there's a fundamental reason for it. Maybe it's just overvalued. The lows, we've got potential all the way down to, realistically zero, but I don't know if Citigroup's going to go away. They'd get bought up before that happened, but the 2008 crash took them to $13. I wouldn't expect that to happen anytime soon, but it could at some point. So, but there's a lot of momentum here, and basically it's stalled out for the last couple of weeks. It's just sitting here dancing around this line. And there's the old support where it dug in there, 57.50. So if it breaks down from here, I think there's good. And that's about a 10% move. Going back to this, you look at Amazon. Amazon's 3,200. It's got to move 320 points. Citibank, that's a 5% move. That's a 5-point move. That's a 10%. Let's see. I'm curious. Let's see what. Give me just a sec, Karen. I'll get to that. I'm curious what options are going for on Citigroup. Let's put Citi in here. So let's say, how long do we think it's going to take to get to the target? That's the next big question. Okay, we've got a plan in place. If it breaks back above here, 58.34 is the stop. The target is 51.54. If you're not familiar with it, that's risk reward. I'll show you. This is the calculator that's inside Patterns of Flash. If you haven't had Patterns of Flash, I would suggest you go at least take the trial, kick the tires. And so what this does is it calculates the numbers for you. So all you have to do is pick a stop, that red line there at 58.34. You put a target wherever you think the target is. I put it 51.54. So I punch those numbers in, and it tells me that 56.64 is my entry point based on a 3-to-1. So I've got $1.70 of risk. Now this is based on the stock price. And then $5.10 of upside, which this number, as long as it's at 33.33, that tells you got 3-to-1. Earnings is 21 days away. Thank you, Will. So you can use that calculator if you're not sure how to do the numbers, just punch them in there. It's really simple. But that's why this trading plan is in place. I've got the stop red, the target green, and then the entry point is orange. It was the only other bright color that worked well. So let's see what they are going for, just out of curiosity. So earnings is 21 days away. We don't need a lot of time because we're going to get out before earnings. So we need at least 30 days though. Okay, May should be enough. April's too tight, but May is, well, it says 56 days there. So let's see what they are. There's a delta of 61. That's a little low. 74, a little higher than I like, but it works. 1,151, 1,153 open interest. So plenty of open interest. Oh wait, that's the call side. Sorry, I need to be on puts. I don't know how I did that. I've barely done any call positions in the last 3 months. Somehow I should just naturally be here on the put side. Okay, that's better actually. The delta of 69, 65 to 70 is what I love to see. 470 by 485, so it's a decent spread. 6,000 open interest. It's Citigroup. There's most likely going to be massively solid open interest. So that's the 60s. We got a delta of basically 70. So if it moves 5 points, we're looking at about a double on this. So if it moves 10%, you're going to get close to a double on it, which is pretty standard, right? For every, generally speaking, and again, this is generally speaking, for every 1 percentage point the stock moves, the option will move 10%. So if the stock moves 10%, the option should move about 100%. Now, here's the beauty. You can go buy a $100 put on Amazon that's way out of the money. You can buy one of them for $10,000, or you can buy 20 contracts of Citigroup. And if you get a 10% move in Amazon, you're going to make 10%. You're going to double your money on that. Here, you'll double your money, but you have a lot more leverage. Make sense? Because you have a lot more contracts. Realize we're just a few minutes away from the end. We got to wrap up. What do we see happen on the spiders? Same thing is happening on the SPX, but I'll just bring up the spiders because it's, you can bring up this or the SPX. So either way, it's the same, but it's basically the same picture as the Dow. Very similar. Left shoulder ahead, right shoulder. It didn't break the neckline a whole lot, not as big as the Dow did, but it broke, and I would expect it to continue to fall. That's my expectation. And if it does break, we're looking at, 379. Long term, again, it's, well, there's, actually, let me just do that. I'll show you on this too real quick. And this is one of the reasons I've been bearish, is there's the head and shoulders. This is back in 07, just like on the Dow, right? Left shoulder head, right shoulder. This one, it broke big time and then rallied back, came back. This is even more textbook than it was on the Dow. So that's 07. And then you can see, you can see exactly what happened, right? Things got cut in half. It literally got cut in half. Here's the beauty in this. I had a guy the other day, found out I was a trader. He was asking me about stocks. So I want dividend stocks. I'm like, I just took a $300 dividend on Apple in 45 minutes. I'm good with that. I'd rather do that than wait for a quarter. That's what I said to him. Because he's like, oh, I just got a fat dividend check from this one company. It's like, yeah, I got a $300 dividend from Apple in 45 minutes. I gave it back on D-Dog, but that's okay. I told him that too. He wanted to make profit. I told him about the other trade. And, well, I get half the profits. I said, as long as you take half the loss, we're good. So, but you'll notice here at the bottom in 09, we got a head and shoulders. Inverted head and shoulders, left shoulder, head, right shoulder. So if you're wondering where the bottom of this market is, wait for some kind of pattern. There will be a pattern at the bottom that gives us an indication that the downtrend is over. As of right now, we are technically lower highs, lower lows. Even on intermediate term, lower highs, lower lows, we are in a downtrend technically on an intermediate term basis. The only way that stops is if we break back above this 457 level. So as of right now, I think we're in a downtrend. I think it's going to continue. The question is how far, how fast, how long does it take? But if you want to know where the bottom is, look for a pattern, a good solid pattern like an inverted head and shoulders. Make sense? Let me answer this one question, and then I'll show you, if you haven't seen patterns of flash, I'll show you. How would you explain what happens in the patterns? Is it small investors trying to swim against the flow of the institutions? Ooh, interesting. No, it's everybody. Here's the funny thing, and that's one thing that's actually kind of a perfect little segue. If we go to the videos here, there's about 8 hours of video in this tool. And the entire tool is, the purpose of the tool is to train your eyes to recognize the patterns in the chart so you can see them like they are here before they play out. But then also to train you what to do with the patterns, how to trade them. And what that makes me remember, Darlo, is it was 2010, maybe. I don't remember what year it was. But those two lessons right there, I tell the story of, I met an old friend from New York, or from my hometown. He moved away when we were 12, but when we were kids, we played all the time. We played sports and we did family events together. We were good friends, and he moved away. And I think I saw him at high school graduation. That was the last time I'd seen him. And I found out he was in New York. I was going to be there for a workshop. Hey, let's meet up. So we met up and had dinner. What have you been up to? I work at a hedge fund. What? It was crazy. And so we sat there for 3 hours talking about stuff. And we got into talking about trading. And he worked at a hedge fund, right? And at one point, this was it must have been 2010 because it was after the crash. Because the hedge fund he worked at was a $3 or $4 billion hedge fund. And then when it crashed, they got cut by like 80 or 90%, right? They were a $400 million fund. When they were at their peak, he had $40 million to trade at his discretion. He didn't have to go to his boss. He didn't have to get approval. He just go in and buy the stocks. $40 million. It wasn't his money. It was his fund's money, right? But he worked at the fund. They paid him a salary. What do you think happens if he loses a bunch of that money? He gets fired, right? So the people that are there at hedge funds that are trading that money are no different than you and me. And he explained those two concepts right there that I understood not only from the real world, not only from reading about them in technical books and watching them happen on the charts, but I realized in that moment when he's telling me, here's a guy that I know, he's my age, he's working at a hedge fund, trading $40 million, and he's explaining, they go in and buy, and I went deeper into the stories here, and I don't have time to now, but he's explaining these two concepts that I have utilized to profit from, and what they're doing in the hedge fund, how fear is creating those two concepts when it comes to the technical charts. So, and a lot of us have learned that, the big hedge fund guys and the pros, they're experts and they know what they're doing. No, they're not. They're no different than you and me. They have the same emotions, same feelings that we do. And they have to manage them the same way that we do. They're no different than you and me. Because if you work at a hedge fund and you're trading your boss's money, $40 million of it, and you lose $10 million, you're out. You're going to be pretty fearful. So now, are they trading bigger chunks? Yeah. But other than that, the hedge, and what is the stat? Mutual funds. That's why I hate mutual funds. 85% of mutual funds don't even beat the market. They do worse than just the S&P. You might as well just buy the spiders. And you'll do better than 85% of mutual funds. Because they try to manage the money and they make the wrong decisions a lot of the time. They don't beat the markets. So if you have either been taught or you have believed that the traders that are trading the big money at the hedge funds and stuff, they're better than you and me and they know more than you and I do, they don't. They're no different. Well, he did fundamental research and all this other stuff, and that's the funny thing, he was mostly a fundamentalist. He bought stocks based on fundamentals, not the chart. But he explained role reversal and round numbers from a technical perspective, the way I understood it, from the way that he traded and his coworkers that traded as well. It was just mind-boggling. And that's when I realized that they're just people. So that's the beauty of patterns. That's the beauty of charts, is that you can see what they're doing in the charts. When you learn to recognize it and analyze it and see, okay, here's what's happening. I don't know what happened yesterday on Apple, but it ran like a buck in like 2 minutes. It went just huge, massive volume. And I think it was probably some institution, and they were probably covering shorts is what I'm guessing, or they may have been taking a big position thinking that it's going to continue to pop. I don't know what they were doing, but it happened so fast. I went, you know what? I think that's just a blip. And it was. And within 3 or 4 minutes, it was back down to only a little tiny candle. So anyway, that's a good point too. What's great is patterns work in both directions. Absolutely. And that's why I say, if you are wondering when this market is bottomed out, there will be some kind of pattern that will show up. V bottoms, like we had it in the COVID crash, V bottoms do not happen often at all. I mean, they are extremely rare. So it's not common for a stock to bottom, especially if we get beat up as bad as it looks like. If it drops 20 or 30 or 40 or 50%, it will not V bottom and just take off. The COVID crash was very different. It will, I would say the odds are 95, 99% that it will not V bottom like it did before. It will take time. Just like in the bottom of 2009, it took 6 or 8 months, 9 months, maybe 10 for it to actually form the bottom and form the pattern. So it doesn't happen instantly. So be patient. If you're looking for the bottom, be patient. It's not here. You will see it clearly when it is here, if you can see patterns, of course, right? So, oh, yeah. I'll talk about brokers. Yeah. Yeah. Brokers I was a broker years ago, and there was a 1-week class that you take to learn to pass the test. And the first thing out of the lady's mouth was, I'm here to help you pass the test, not to teach you what to sell. I'm not here to teach you about the markets. I'm here to teach you how to pass the test. And she was being very honest. Your firms will teach you what to sell. Brokers are glorified salespeople. They're licensed salespeople is what they are. No offense to them, but that's just the reality of it. That's what I was for a while. Well, I did short-term options trading. That's why I got out, because I could see the internet killing my job. I love doing it. But anyway, so if you haven't done this, you can have there is a 2-week trial. I don't have a lot of time to go into this too much, but what you do get is you get flashcards, right? Which is designed to train your eyes to see the patterns, right? You flip them over, you look at them, train them, right? Just like doing math. There's quizzes, which allows you to test yourself, figure out, where you've fallen short, what information do you need to get. The calculator, which you saw, videos, there's over 8 hours of video in here, which you can see here. There's not only the foundational information, but there's candlesticks, price patterns. There's about 30 or 35 patterns in here. I go in, each video describes each particular pattern, what to look for, what to look out for, what makes it strong, what makes it weak, where might you consider trading that pattern, getting in, getting out. And then there's bonus videos in here. There's an hour or two of bonus videos. And then twice a month, I do a live work, just like we're doing here for live, where you can ask questions, we can interact. Twice a month, we do a 1-hour session for those that are active subscribers to Patterns in Flash. And then you got the pattern of the week. Where'd that go? That's on the main screen. Once a week, I do a pattern. I did 2 this last week, actually. There it is right there. So once a week, you'll get a pattern of the week. So 3-7, yeah, that's last week. That should be, hopefully it'll be up today. The tech team's got it. Hopefully they'll have that out. So I appreciate that, Will. Will just said, I think it's the easiest way to learn to make money on all the Wealth Builders HQ training. So I appreciate that. And it is, I created this for myself. If you haven't noticed, I'm very simple. I don't complicate things, even though I did years ago when I first started. And when I created this tool, the thought process was always, if I had to go back and start over again, what are the most important, most critical pieces that I would want to learn? All the fluff, I mean, the thousands of pages of books that I read, with most of it just being fluff and stuff that you never, ever use. I mean, Elliott wave theory, I never use it. Fibonacci's I don't use. I played with Fibonacci's for a while. I don't use them. I mean, Rob loves them. Rob uses them. It's just not my thing. So there's 200 different indicators out there. You just got to pick the ones that you like. And the number one indicator, if you haven't figured it out, is that one right there that you see on the screen. Price. 90 to 95% of your decision should come right off the price chart. All the other indicators are derivatives. Almost all of them, I should say. Fibonacci's are not, but they're just mathematical calculations to smooth the price chart out. MACD, RSI, Stokes, those are all just mathematical calculations that smooth the price chart. Learn to identify the patterns in the chart, and you'll be far and away ahead of all those other indicators. So, all righty. Any other real quick questions? Just realized what over. Moving averages. Yeah, moving averages are good, but remember, they are still derivatives of price, right? They're still just mathematical calculations that smooth out the price chart. Are there great ways to use moving averages? Absolutely. Do I use them heavily? No. I don't. 95% of my decision comes off the price chart, and the other 4% is off of volume. And then I may poke at, these are the indicators I look at. I just go through real quick and look at these. So I don't put a whole lot of emphasis on indicators at all. So, but moving averages, if I was going to use indicators, moving averages is at the top of the list, because they are, especially if you're using like crosses. Yeah, it's for the most part price. You learn to analyze and recognize price and see what it's doing, then you will start to realize that the other indicators, you really don't need them. So yeah, what's the number one is, what's the trend? What's the overall trend? Long-term, short-term, intermediate term. What do you think is going to happen in the near future, over whatever trading period you're looking at? Is there some kind of pattern that gives me a clue that tells me that, we're peaking out, there's a head and shoulders, this market is probably over. Unless we can break back above this most recent high, then the downtrend is in place. We got lower highs and lower highs going this year so far. So yeah, price patterns and trends and candlesticks. So that's about it. So, all right, I'm going to shut up before I keep going. Thank you, Clarice, for putting up with me and for dropping the links in. Appreciate y'all coming and hanging out. Oh, thank you. She just put there, if you want to you got a 2-week trial with Patterns in a Flash. Clarice just put that in there. Thank you you can get the trial. And then if you like it, keep it. If you don't, no harm, no foul. You get to kick the tires and have some fun. So thank you, Karen. Appreciate that. Thank you, Will. Thank you. Thanks, Kevin. You too. Y'all have a wonderful weekend. Take care and happy trading. God bless. Bye-bye.